Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live. 888-994-4995, Studio A.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something to help you make a little money, save a little money, or maybe just help you navigate this crazy world that you live in. Today we're going to talk about mortgages and what's going on in the mortgage industry, and with us today is Cliff Bernstein. Welcome, Cliff.
Thank you, Laura.
How are you today?
I'm doing great. How are you?
It's always
something.
Always something, you know, whether it's title work. I had the strangest thing happen today where I have the seller and the mortgage lender says to the, maybe you know this because I've never heard this before. The lender says, oh, I can't fund this because the title company is not sending me where the buyer's wire came from. The title company has to send it. Have you ever heard of that?
Well, I mean, usually no. I mean, what we do before we get a clear to close, we verify that the borrower has the funds to close.
In an account.
In an account. And once that's signed off and we're cleared, we don't care where that money, we're not gonna ask where the wire comes from, except if he's receiving gift funds. We need confirmation from the title company that that it came from the donor.
Okay.
So they might
not
have
them.
that,
okay.
but not the actual borrower. No.
Okay.
That's
interesting.
we have to look into that.
Yeah. I'm telling you, it's never a dull day in the
It's always something.
It's always something.
Yeah.
So, you know, as a realtor, you would think that I would know what the rates are every day, but it changes so often that I honestly have no idea. Like, it's day to day is kind of interesting.
Well, don't feel so bad because I've been doing this since 1995 and I learn something new every day anyway. But talking about rates, that's the first question everyone will ask me. What's your rate?
What's your rate?
What's your rate? Well, what's the rate today? And, you know, my heart rate, my pulse rate. It's a very general question because it depends on a lot of different factors. Depends on down payment, credit score, usage of property. Is this for an investment property, second home? Is it for a primary?
Okay, that makes sense.
How much are you putting down? So a lot of factors. Condo, single family home.
So let's talk about that then. So, you know, obviously we have conforming, which is not a jumbo. Mm-hmm. Tell us what a conforming loan is.
So we call it conforming because whether you come to me as a lender, whether you go to Bank of America, Wells Fargo, guaranteed rate, we're all lenders. We're all going to close your loan. We're going to fund your loan with our money. And then after closing, we're going to sell that paper to an entity called Fannie Mae or Freddie Mac. They make the guidelines. And everything we do must conform to what Fannie Mae guidelines state. And that's why we simply call it a conforming loan, because it conforms to Fannie Mae, whether what their loan size is, what they want on debt to income ratio, could be 1,000 different things.
Okay, so that's good. So what is that number for a conforming loan? Because that would be different than like a jumbo loan.
Correct. So right now you're at $806,250 for conforming loans. Anything over that loan limit becomes a jumbo loan. Okay. And then you're just in a different arena. It's still a conventional loan, but it's not a conforming Fannie loan size.
Okay. Now, is a jumbo loan higher interest rate or lower interest rate than a conforming loan?
So years ago, jumbo rates were higher than conforming rates. But they've done studies. They studied these loans, and the paper actually performs better on the secondary market. They feel because they might have a higher net worth borrower, perhaps it has a higher credit score. They reward the borrowers for that, that type of qualifications. And right now, rates are better on jumbo loans than on regular conforming.
So if I was buying a jumbo property that is a primary residence in today, not tomorrow, and I know that this is going to air, on a Thursday, which is, here, it's going to be different on a different day. What are rates today?
Oh, okay. So if I ask you, anybody could Google, or you could Google what's the average 30-year conforming 30-year fixed. I would say right now we're having a decent day in the market. I would say when it comes out tomorrow, we're going to be around 6.2, 6.25 on an average 30-year fixed rate.
Okay. And that's on a jumbo.
Oh, I'm sorry. On a jumbo right now, you could probably lock into, I know I have, you could lock into a 30-year fixed somewhere with a 5 handle. I locked a loan the other day at 5.875.
Now, what credit score was that based on? Because that makes a difference too, right?
Right, yes.
So can we talk about the brackets of credits?
Right, so credit score, and again, this is something that changed over the years. When I first got into this business back in 1825, before the car was built, everything was pretty much, you had a 620 credit score, you're a conforming borrower, they did not, everything was pretty similar. Right now, there are different type of plateaus. So it'll start, and this is another thing that's going to happen, and I'll talk about the change after. But right now, say it's 620 credit score, so from 620 to 639 is one bucket. Then you go from 640 to 659, from 660 to 679. You could go all the way up to 700, 719, 720 to 739. 740 to 759, once you're over 760, some jumbo programs 780, but for conforming Fannie Mae 760 or higher. 780 is where you want to be. If you could be a 780 or 820, it's just bragging rights. It doesn't matter.
Okay. So the credit score that you gave us on a jumbo, which was 5 1/8, I think you said
5.875.
5.875.
Yes.
That's based on what credit score?
So that would have been based on a 760.
So that's the best possible.
Well, 780 is the best, but this one happened to be 765. 780 would be the top of the line credit score for jumbo. If you're, we could do jumbos in a lot of cases down to 680. But it's not going to be pretty. It's just not going to be pretty. 700, back
700 is still a good
back
score.
in the day, 700 was pristine. Hey, I got a 700 credit score. I mean, you're going to come to a lender, you're going to ask a lender, 5% down, 10% down with a 705 credit score. There's going to be a lot of adjustments, and then you're not going to be happy with the rate, and you're going to say, well, my neighbor got a 0.5 point lower.
So if you put 20% down versus 30% down, does that change it?
Well, yes. So actually, you get a little reward if you on a jumbo excuse me, we're talking conform.
Jumbo. Jumbo.
So jumbo, we could do it as little as 10% down. I have a 10% down program. Again, not for a first-time home buyer though. You can't be a first-time home buyer to do 10% down. And the rate's not going to be great.
Wait a minute. You can't do a jumbo loan with 10% down on a first-time home buyer?
You can't do it with 10% down on a first-time home buyer. I don't have. There might be a program.
Which means you should have bought when you were 23 before you got to that jumbo
There'll be a
loan.
non-conforming program out there, but for you want those decent rates, 10%. It's very difficult for a non-first-time home.
But is there a difference?
There is a program, though.
Right, and that would be one of those. What do you call them?
The non-QM?
Yeah.
Well, the non-QM, and there are some certain. We'll sell to all different entities. We're not selling these loans to Fannie Mae. We'll sell to different private equity firms, hedge funds, things like that. And you could find one with 10% down for a first-time home buyer. But again, you're gonna feel the rate hit on that. There's going to be some adjustments.
Okay.
Yeah.
So is there a difference though if someone was to put 20% down versus 30%?
Yes, on both jumbo and conforming. So there will be. You could expect. So let me just make a comparison. Apples to apples. Just a 780 credit score, 20% down. No points, jumbo, let's call it 6.125. You do 30% down, you might get to that 5.875 number with no points.
Okay.
Yeah.
Okay.
So that's the difference, 6%. But you're going to do about an eighth better.
Okay.
It's not going to be, it's not going to be that half a point, but it's going to be an eighth or a quarter better with 30% down or more on a jumbo.
That's good to know.
Yeah.
So now let's go back to FHA.
Okay. Yeah.
So that's for typically a first-time home buyer. You can use it again once you don't have an FHA loan, which means you don't own any other homes.
Correct.
Now, if you had investment properties with regular mortgages, right, you could still do an FHA loan as your primary.
As long as it's a primary property.
Right. Okay.
Right, because you can't do FHA for investment. And I love originating FHA loans.
Why?
I feel the guidelines have caught up. There's been a lot of bad information out there. Especially a lot of the agents, a lot of the listing agents, if they hear, oh, he's going FHA, they feel like the appraisal is going to be scrutinized.
Yeah.
That changed.
Misconception.
That changed years ago.
More than 20 years ago, because I've been doing. My father, who he's passed away a long time ago, and he used to say to me, "I would never take my home off the market for 3.5%," and I was like, "Daddy, if people didn't take their homes off for 3.5%, I'd be broke."
Right. Of course.
Right.
Of course. And it's, right now, well, just getting back to the appraisal, it's back on an even playing field. So if there's going to be a problem with a roof, it's going to be the same problem for FHA as it is for conventional and vice versa.
I don't know about that. I will stop you for a minute. I've seen where there's stains on the ceiling.
Okay.
In conventional, and they don't say anything. However, in an FHA, they would say, "I need a letter from a roofer saying that there's no leaks."
Well, right. So basically, listen, we don't ask for a roof inspection unless the appraiser makes a comment on the appraisal. Then the underwriter's going to either ask for a roof inspection, something like that. But again, that's just poor appraisal, because if they see if there's evidence of a roof leak, in a conforming conventional loan, that should have been mentioned in the report. So maybe it was just not picked up by the appraiser, and you had someone that was a little more.
I had a situation recently where the front door had rust on it. It was FHA. So typically, I understand. I've never had anybody as picky as this guy, but that doesn't mean that you wouldn't get a picky person for conventional either.
Right, it depends on the appraiser.
So it depends on who you get, right? Because even like VA, the great thing about VA is they have something called Tidewater. And funny is like
they give you the heads up.
I actually had an appraiser a lender who I was selling their house, and they had no idea how Tidewater worked. So I was like, what? Like, how do you not know? Because they call you and say, hey, we can't hit the number.
That's
so
what
if
I
you
love
hear
about
nothing, that's good news.
Good news. No news is
good news.
Right.
Yes.
But yes,
So,
that's good news.
yeah.
But getting back to the appraisal on an FHA, the only difference that I see.
No peeling paint.
What?
No peeling paint.
No peeling paint. But it's the value will stick with that property for 120 days.
Yeah.
So,
It's only 100. I thought it was 6 months.
It's 120 days. So
Okay.
that's
It could be good and bad.
That could be good. Hey, you could get a high appraisal, but that's the only issue. That's the only problem that I see the difference, or not a problem, but that
Where
really.
you might then, as the agent,
as an agent might
not
say,
want to
well,
take
yeah.
another one while you're in that process if you felt it was too low.
Right, exactly, because you're stuck with that. But if you go to the conventional loan, you don't have to stick with that FHA appraisal if there was one within 120 days.
And if we're talking too fast and you're not understanding what we're saying,
Oh,
and you have
I'm very
questions, give
me a call.
Give Cliff a call. What's the best number for them to get you?
Always 561-213-6852.
Okay. We're going to go to commercial break, but when we come back, we're going to talk about rates for FHA and how that will work. So stay tuned, and we'll be right back.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our #1 priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi everyone, welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Today we're talking about mortgages. We're here with Cliff Bernstein from Fairway Mortgage. He is one of the top 1% originators in the country. Did I get that right?
You got that right.
All right.
Very
and
proud.
If you're thinking about buying or selling a home, you definitely need to give me a call, Laura Sanders, Remax Direct. I have to just say this really quick before we get back into FHA loans. I kind of find it funny how people pick their realtor. I actually had a situation. I went on a listing appointment. I am the top agent in that area. I sell for the highest sales everywhere in that area. I actually had this agent call me to say to me, how did you get this house under contract for such a high amount of money based on price per square foot? Well, let me first make this clear. It does not work price per square foot. Let's talk about the common sense of this. Number one, if you're on a water lot, how can you be the same price per square foot as a house on a non-water lot? Impact windows. You have impact windows, then another house does not. Pool, no pool. How do you determine that in price per square foot? Upgrades. They have a new bathroom. They have a brand new kitchen with quartz countertops. Again, does not work price per square foot. So this agent and I have a conversation. I explained to her how it works. Next thing you know, she gets a listing that I went on the appointment. She's really not selling anything in the neighborhood, in the area, and she's asking me about how to sell the house in the area. Kind of funny. Think it's funny, but you know, perception is not everything. Be very careful. You see people marketing online, it's not even their listings. So look at people's past proven track record. That would be the best thing for you to do. So let's move back to mortgages. I just had to say my piece. So back to FHA mortgages.
Like I said, I love originating them.
Yeah, and a lot of people don't understand it. And one of the things that I find interesting, a lot of people don't know is that if you go with certain direct lenders like yourself, right, companies, you guys basically interview your appraisers. Now, you can't talk to them specifically about that deal, but you have vetted your appraisers because you know that they do their job right and they're not nitpicking or making things, blowing things out of proportion, right?
Correct. So to add some light on this, I mean, years ago it was basically like the wild west. You send me a purchase contract, I'll call Joe the appraiser. Hey, you know, we have a contract, it's $500,000, and the problem was a lot of these appraisers felt pressured to bring in the value.
Right.
You know, you don't want to let a good referral partner down by not, you know. So again, they
have a lot of liability, though. They have a lot of liability. Of course,
and you know, listen, that license is everything. You have to, govern yourself accordingly and just do the best job that you can, and you can't be pressured by any outside noise. But in any case, they changed the whole thing around and they built like a Chinese wall. It's part of,
which is kind of sucky because I didn't say the bad word.
Right.
Because they're now taking a big chunk of these appraisers' money.
Well, they're trying to make it easier, less expensive for borrowers, but by adding a management company,
it's adding an extra fee.
It's adding an extra fee because now the management company that manages everything has to get paid.
Right.
And who got cut? A lot of times the appraisers got cut.
Right.
Because there's so much, how much is someone going to pay for an appraisal, although they've
Right. And they got to drive there. Then they got to drive their comps.
Oh, they're worth everything. They're worth their price in
Right.
gold. They do a lot.
But there's a lot of talk
And there's
about
a
getting
lot-
rid of them.
And a lot of liability.
And going through AI and doing like a walkthrough video and
That's one thing you need, that that human element to go in there. Maybe, obviously AI is there to support them or support the person, or the individual, but you definitely need that human element.
listen, if AI can't be a doctor, how can AI be an appraiser?
Correct.
Again, it's not price per square foot. Like, I just laugh at
It's
that.
crazy, but getting back to the management company. So now all our communication goes through the management company, and they will schedule it with the appraiser. But to your point, yes, as an experienced loan officer, and a lot of experienced loan officers at Fairway, they ask our opinion. Who did you like, throughout the years? Who do you recommend in Broward County? Who do you recommend in Palm Beach County?
Right.
And we'll give them names.
Because Broward shouldn't be in Palm, and Palm shouldn't be in Miami.
Correct. And these are the great part about it. These are all wonderful appraisers. They're true professionals. They've been around for a long time. So at least, I know my clients are going to get, I don't know which individual appraiser is going to be on the job, but I know everyone on the panel is a real professional, and we're
Right.
going to get a real fair report. And like I always say, it's not the buyer's problem. The buyer doesn't have to buy a home. The seller has to sell it. So they're all eager to get that value. And appraisals have been coming in, lately they've been coming in higher, which is, I've been seeing a lot. It's like a
That's good.
It's a different dynamic now. They've been coming in higher. Yeah, I mean, it's something that we need, but I don't see, I think they've really, when they first moved to this HVCC, part of the HVCC management companies, there were a lot of issues. They were bringing appraisers from Miami to do Palm Beach.
They're still doing that, which I think is a mistake.
But more and more, you got these people on the
Right.
panel now, and we're getting pretty good appraisals.
That's good.
Yeah, I haven't
I
had
think it
issues.
does make a difference on the company that you pick because of whether or not you get to pick your
Right.
panel.
Right. They're not against you. Like the appraiser's not against. Everyone's like, oh, they're working for the bank. They want to. No, they're independent. They're doing their job, and you're going to get a fair value.
No, that's good.
Yes.
That's good.
Yes.
So what are FHA rates looking like today, and how does that work? And
So-
do they do combined rate, combined credit scores, if you know what I mean by
Right,
that?
right. So again, I love FHA. I love the guidelines. My buyers, my borrowers who are going FHA are such good, hardworking individuals. They want that dream of home ownership. And it's just a pleasure working with everyone throughout the process to make that dream come true. And interest rates are lower on FHA. It's, in my opinion, it's the second best option. My option's always conventional,
Right, okay.
conforming, because that's going to be the least amount of money for the borrower. Because we mentioned interest rate, but that's one aspect. Problem with FHA is there's mortgage insurance.
But that guideline's changed recently, right?
Well, well, it changed recently. So now if you have 10% down or more, you could have it removed after 11 years. It used to be for the lifetime of the loan.
Now, is that for everybody, even people that got it before?
That's for everybody. That's
So even if you got it before and you were told you can't remove it,
right.
now if they've
if
had to have it for 11 years and be at 10% equity.
So you were saying on a new origination?
No, let's say on an old one, right?
Oh no, it's not grandfathered in. If that was.
Oh,
it.
so they can't.
Right, no.
They're stuck.
Right, yes, that's it. That's fine. Yes.
That sucks.
Yeah. Well, because you have to originate it with 10% down, and that's.
Okay, I see what you're
That,
saying.
yes.
So if they didn't put 10% down,
No, it's just it's on all new loans, which started. What was this? It changed about 2 years ago, 3 years ago.
oh, has it been that long?
Yeah, it's been.
I
yeah.
missed that one, by the way.
Yeah.
I learn something new
So,
every day.
But again, it's kind of irrelevant because who?
Stays in their house for 10 years.
No, first of all, even if you stay in your house for 10 years, the average person stays in their loan for about 6 years, 5.5 to 6 years.
Okay.
So these things aren't being held forever. It's kind of a moot point. It's a nice talking point, but the goal is not to be in that loan. I mean, rates will eventually, people move, people upgrade, rates get lower, they refinance if there's an opportunity. So, yeah, a lot of activity.
Sounds like. So I was talking about combining. So let's say you have a husband that's the primary breadwinner, but his credit score is low. The wife is a stay-at-home mom, but her credit score is higher. Is there a way to combine those two?
You know, we don't combine those scores within the individual. There's a cumulative average, but we're not gonna combine the scores of two different borrowers. It's just not gonna.
Even though they're on the loan together.
Yeah, it's always gonna go off of the lower of the two borrowers.
Years ago, there was one that went off the higher of the two. You know that?
Well, there are different programs that there are a lot of non-QM programs that might take the higher. They might just take an Equifax. They might just take the TransUnion, whichever one they use. They'll take the higher one. So there's different guidelines for different programs. But Fannie Mae guidelines, we're going to take the middle score of the lower of the two.
Okay.
Husband
That sucks.
of the borrower. Yeah, I mean,
what's the lowest score you can go on an FHA?
Technically 500.
And well, that must look like a crazy score,
It's,
crazy rate.
That's where I could go down to 500. So anything under 580, I could do under 580. You have to put down a 10% down payment, and we still have to get that DU approval.
Okay.
So that's the challenge.
Yeah. So what is a good way for people to get a hold of you?
24/7. Again, I shut down from 3 to 4 each night for an hour to take inventory. No, it's 24. It's 24.
It's 23 hours a day.
23 hours a
Is
day.
it the hour you call? No, I'm just kidding. I'm joking.
Call me. Trust me. I'll answer my phone. 561-213-6852.
Okay, and if you're looking for a top realtor, give me a call, Laura Sanders with RE/MAX Direct at 954-650-0827. Again, that's 954-650-0827. And if you didn't get Cliff's number, you know how to find me. Reach out to me and I'll connect you to. And until next time, make it a great night.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.